Hi, this is R.N. Bhaskar from BKBB, which is an acronym for Bhaskar Ki Business Baatein. This is a channel that brings to you every week a policy analysis, sometimes a business story, and sometimes a conversation. But at this time, at 8:15 in the morning, we come to you with the news behind the news. And I know that today's Monday, you had a long weekend, or whatever the weekend was. And here's wishing you a wonderful week ahead with more news for this week. Sorry. And yes, as a reminder, please click the subscribe button. And please click the like button. It helps us enormously. And most important, tell all your friends about us because we do things that many people don't. And today's news, I have my co-anchor with me, Anurag. Welcome, Anurag. It's good to have you with us. And the three titles that we shall be discussing are there on your screen. The first is a dramatic shift in the way CEOs are appointed in the biggest companies in the world. And the second is on how GDP has declined a bit and what are the constituents behind it. And the third one is, yes, corporate profits have slowed, yet GST has climbed. Interesting combination. Okay, let's take the first story first. In the past, whenever corporate CEOs were appointed, they usually had a pedigree of coming from IBM or a General Electric or a steel company or some other large company where you to manage laws, strategy, people, and everyone else. That hands-on experience. But as the Bloomberg chart shows, over the years, most of the CEOs in the world, in the world's largest companies, are coming from consultancy firms. There could be two reasons for this. One, because a consultancy firm talks directly to the CEO, and the consultants meet the CEO regularly, explain the strategy. The board also understands and are very comfortable with the consultant, so it's easy entry for the consultant to become a CEO. The second reason is that consultants know the best strategy, and that's where they get in there. But what is missing possibly is the hands-on experience as a corporate player. And that could be the reason why consultancy company CEOs do very well in financial jobs, but may not be the best people in manufacturing jobs or in jobs which involve sale and manufacture products. And that could be one reason why assets are climbing faster in the developing world than in the developed world. Again, here, please remember that the developing countries have a lower base, so climbing is easier. Developed countries have a larger base, so climbing in percentage terms is not so great. But even then, this shift in employment of CEOs could suggest a dramatic churn taking place. Now, the Western world with its large companies have accepted and embraced consultancy companies. The developing world is still comfortable with hands-on experience and pick up people with hard corporate jobs and experience. Who will win? Let's see how trends go. But yes, it's an interesting development. Now we go to the second story, which is on India's GDP growth. Anurag, could you come in?
Good morning. Today's report is about India's Q4 GDP growth rate. We'll cover what went behind it and what could be expected in the financial year of 25-26. The 7.4% growth in GDP in the Q4 exceeded market expectation of 6.9%. However, a slower rise in gross value added (GVA), which was revealed, which has revealed a softer momentum in economic activity. Basically, GDP is calculated by adding net taxes minus subsidies, to the GVA. Since the government subsidy payout was 0.9% lower year on year in this quarter, it gave a boost to the GDP. As mentioned, GVA growth was not as strong as GDP's. The sector-wise breakup shows a broad pickup in the economic activity, as you can see on your screen right now, with construction leading the chart. But this growth rate does not entail just from the private investments, as the second half's acceleration reveals a strong grip held by the government through public expenditure. The center's capital expenditure was too strong, with 61% year-on-year rise in April, whereas subsidy payout reversed the fall since seen in March, increasing to more than double in the month of April. The role of consumption and investment reversed in the quarter four, as gross fixed capital formation investments rose and the capital final consumption expenditure slowed, which underlines an uneven nature in this growth rate. Moreover, the index of industrial production (IIP), along with service exports growth slowed down. However, there was a growth in goods exports, which was led by a sharp drop in the rupee. If we consider the whole financial year of 2025, it is the lowest in 4 years at 6.5%, which is overall uplifted by the strong headline quarter four numbers as well as an upward revision in the quarter three numbers. What's your take on this, sir?
Well, interesting times and interesting numbers. What is interesting is the second chart on the screen, which shows that government, public administration accounted for a rise, and agriculture accounted for a rise. Every other sector accounted for a fall. Now, that has two implications. One is the government spending has increased both on government offices as well as on its own projects. That may or may not be a good thing. I think it's not a good thing because the returns on government expenditure are lower usually in India than the returns on private investment. However, there's a caveat. And the caveat is this: in the last 2 years, government companies have done very well, partly because the government wanted a higher dividend. So, books have not been as transparent as they used to be in the past. So, these numbers have to be taken with a pinch of salt because when GDP in the last quarter suddenly goes up, you can see the contribution of agriculture and public administration. Anyway, thank you. It's a good story. It's interesting. Let's go to the next story. And the next story is about the government's own GST going up. Now, GST goes up when corporate profits decline, consumption declines, exports decline, imports increase. Then why is GST going up? And I've always said that GST goes up in India because of the free gifts the government gives to various states and to constituencies. Now, when you give a cash dole out, the man gets 100 rupees, he spends it. When he spends it, he has to pay GST. That other person spends that also, he has to pay GST. So the GST is the effect of government spending, usually on doles and grants. And that is why the GST has gone up, even though everything else has declined. It just shows that India's GST is a sign of how the government has learned how to earn more than its people do. And that, in a way, brings me to the end of today's session. Thank you for being with us. It's wonderful having you here on Monday morning. Have a great week ahead. But before we sign off, let me take a couple of questions that have arrived. The first question is on Anurag's story, and that is, if GDP has slowed down, does it mean that India is actually slowing down? Yes. If you look at the GDP growth of the last 3 years, it's been going down and down and down. There's a deceleration taking place. There's little evidence of a Viksit Bharat. And with the balance of trade becoming bigger and bigger, I'm afraid India is going to face a tough time ahead, in spite of which RBI has given a huge dividend to the government. There's a second question that's come in. And the second question is, do you think consultants make bad CEOs? No, not really. One of the best performing companies, corporate groups in India, is Wipro. It appointed a consultant. Now, you can choose a consultant because he understands strategy. He's guiding the company instead of guiding someone else. If you can do it yourself, why not? But there are many people who said, no, you must get burnt by the CEO seat in some other company, and then they should be taken in. If not as a CEO, as a deputy CEO, as a manager, unless you feel the burn in the corporate place, you will not become a CEO. It's a different strategy. Different people follow different strategies. I leave it there. There's a third story. If GST continues going up, isn't that bad for the country? Well, if GST goes up because manufacturing goes up and GDP goes up, it's good for the country. It means the country is benefiting and the government is benefiting. But if only the GST goes up and the country does not, it means that the country could be in trouble very soon. Okay, that brings me to the end of today's session. But as usual, I have 3 reminders. First, if you're not a subscriber still, please subscribe. It helps us. Second, please click the like button if you like today's discussion. It helps algorithms with both Google and YouTube. And there's a third request. All of your friends, you discuss things, please tell them about us. We think we're doing something interesting. Please tell more people about it. We'd love that. I'm signing off now. Have a great week ahead and have a wonderful day today. All the best. Do well.